Hey, good morning, guys. Morning, chat. So we got a price right now down it's up 0.20%. Waiting to see a little bit more of a trending condition. I managed to scrape by a little sell, but I wasn't able to send out a signal for this sell because I didn't even think I was not planning on trading the pre-London session. I wasn't planning on trading the pre-London session. So when I got onto the charts just to see where markets were at, I saw this, man, this was such a nice little area over here. So it was just playing out by that time. So I just managed to grab myself a little bit of a scalp over here. So it's pretty good. Like, you see how price was holding this level for so long? Like, it's always increasing the probability. Like, when price is at an area for like a very long time, it increases the probability like a move is due, you know, and this is a pretty key time here as well. That's you got that one also. Nice one. Yeah, it increases the probability. Like, you'll find yourself in this situation again in the future where you're gonna see price stagnate shortly before a major session open. You're gonna see the move has a high chance of actually distributing or at least giving some kind of a push. So that was the idea over there. And we also had like some kind of you got some of that one as well, but I got out too soon. Oh, nice. Yeah, I mean, look at this. We have a fake out above here. This is how I was reading it, and this whole area here is just like a consolidation, a whole zone. So I managed to get in right here. I was actually coming on the charts when this 1 minute candlestick was closing, when that thing was coming down. So I got about 2 minutes here to prepare to catch this. But the stop loss was nice. Put my stop above this area over here, above resistance. it retested as well. I just didn't have everything set up properly. So, but it retested everything as well here. It came back, retested, and then continued to move down bearish. Yesterday jumped into some buys, unfortunately. Like, setup was not the greatest. Probably should have waited for those buys, but I've been kind of impulsive of late. Don't know why in September here. I've been very impulsive with my trades. So yeah, I'm just gonna try and relax a bit, because I got really comfortable with price just moving in my direction. Even with not the greatest setups, I think I got too comfortable with just price moving in that direction. So you see, that's a problem with a bad habit. It's like whenever you get rewarded for a bad habit, you're gonna want to do it again. And you see, like, it doesn't work in the long run. It actually makes it it can make it a lot more difficult for you. So yeah, that's something I want to work on here moving forward again, just so we can get mentality back to par. But you know, it's not easy, chat. Like, literally, I've been having good psychology since January. You know, it's very difficult to always be 100% disciplined. And you know, this is the reality of life, not just trading. But yeah, it's the important thing is you kind of managing the risk during those situations in some shape or form. That it's not going to get too overboard, something you can't really recover from, or something that takes you much longer to recover from. Similar thing below. I got similar, like right now there's a range. It's like chopping up and down a bit. That's what I don't like. There's a nice little breakout that just happened over here. So guys, like, we'll be taking trades on stream, but for this London session, I'm cutting my risk at 35% drawdown. I'm cutting my risk. So this is going to be a quite an interesting stream over here. We're going to see how people see the potential of risk management in that regard, because you're going to see most of these trades, like, trust me, they're really good trades. Don't give you a hard time. They just keep going. You see, like right here, you got to sell right here. You got to sell right here. So there's no point, especially for the London, when, you know, London's been behaving the way it's been behaving. There's no point. We might as well just look for the easy trades. And the moment it comes like 35% into drawdown, just cut off that trade. Gonna save a lot of money in that situation. So that's gonna be the plan moving forward. We're just gonna be looking for clean follow throughs. No drawdown, no more sitting in drawdown. None of that. I'm over that. Like, I think that's been the lesson, because the thing is, like, there's always some small thing to change. If you look at the way our trading patterns go, you know, sometimes we trade just mainly shotgun. Sometimes we switch up with shotgun consolidation. Sometimes we need those swing entry models, as you can see. There's always some kind of tweaking that always needs to be done, like slight tweaking. So I think this one has not been the most straightforward, but I believe that's the tweak that it needed, was just to make sure that the easy trades just going to remain easy and the bad trades are going to be limited, like really limited. But yeah, hope everyone's doing well. It's Freaky Friday. today. So, oh man, look at this volume already coming in here. Candlesticks just dumping. Go on the 5-minute time frame. Let's see kill zones. Need to patch that bleeding. Yeah, we need to patch it. Need to patch it because it means that I need to hold trades more. I need to hold trades more if that's the case. So we need to patch it because I don't like holding trades necessarily. Yeah, but right now, let's see what's going on here. Yesterday we got the major dump. Price moved up. Consolidation. Looks like we're consolidating. We're actually not having any direction. Today's non-farm payrolls. Today's non-farm payrolls. Price is up 0.10%. It's not trending or anything. It doesn't look like price is trending. And it doesn't seem like it wants to trend. So you got like support. Down over here, you got resistance above this zone. What I kind of wanted to see was price break above like 35.54 and then continue to move upwards. Because that actually looked like a fake out situation that happened here in the 1 minute. Right over here. And I thought, man, this is going to be the start of the move upwards. Adjust this thing a bit more. Where should we put it? Yeah, I think that looks fine. I love the stream update. Yeah, because I'm always thinking like, I'm trying to always think from the perspective of what everyone is seeing. Because you know, the thing is like, no one's going to tell you what to change. So I have to always consider like what it is you guys are seeing. Because I do like this one. We're still going to keep this one right here. But this is just so we can at least see the candlesticks just a little bit better. Get like a full screen. Gbpjpy, guys. You know, some of the streamers, they just stream to stream, but you know, we're here to elevate. We're here because I like nice things and I want nice things for everybody in my community too. So I try and make things really enjoyable. Or clear, at least clear. I got some of that. Okay, yeah, that was nice. So now we're just waiting. Now we're just waiting. Fakey. Kind of aggressive over here, if you ask me. Break below support, come back up here, take out the highs. Basically, old one's the best. Yeah, we're gonna keep the old one's the OG. We're gonna keep it for sure. But right now, what we're doing is just a bit of analysis. So let's see here on the daily time frame. Daily skyrocketing up still. Previous daily close as a resistance. And you know, it's mainly, I think, due to now the NFP. So you got the non-farm payrolls. This is going to be quite important. It might mean the candle might stay as a doji for up until the New York session. Hopefully it can move, but yeah, it seems like it might stay like a doji. Definitely, like if you look at the daily, it is kind of scary here because it's quite parabolic. In the way that it's been moving, it's really parabolic. It's a skyrocket over here. Create resistance. 4 hour. Let's see anything interesting. Nothing too interesting. I think the only interesting thing was what happened during the pre-London time. This is the only interesting thing because we had that clean range as well on the left-hand side. On the left-hand side, you see that got corrected down towards support, right? Exactly down towards support, and then had the small little reaction, smaller retracement here, This is like Fibonacci golden zone. So it just broke below, creating new lower low, smaller retracement. But I believe this is just the range that we're going to be trading in between. So probably going to bounce around here until New York session. Yeah, so that's pretty much the analysis. Quite simple. You don't need a lot of chart work. You can see where price came from and where it's currently sitting at. So we had previous accumulation here. Nice little head and shoulders, roll over to the downside. And that's it. That's just been the most recent move. And then there was one other small move that happened right over here too. Broke below the lows and then it faked out traders. Now we're coming back down. Yeah, simple analysis. You kind of always want to give yourself like space, you know, in a sense. You want to give yourself space when doing analysis, so you don't box yourself into too many unnecessary levels. So you gotta just have a wider perspective. And the reason this is because markets gotta move, right? They gotta move. So there's no point having like all these zones and so many restrictions on price. So we gotta move, we gotta flow. See this? Boom, boom. So where the next flow is gonna be heading is if we break above 35.53, then you know price can maybe move up here a bit more. You have about like a 34 pip range. 34 pip range. But you also have clean candlestick body right here too. The problem is the daily is not trending. We're up 0.09%. You know, 0.09%. It's not really looking too appetizing. How do you prevent revenge trading or over trading? I lost my funded in last 2 days. I just did not understand the market anymore. Oh yeah, maybe like when you're doing a funded and you're doing a challenge, definitely the psychology plays a bit differently. You know, if you take a losing trade to start the challenge, you kind of have it on a pedestal, so it's like it kind of demotivates you a lot. It demotivates you because now you're playing catch up. So yeah, when you approach funded programs, you have to really be patient, man. I can't stress how much patience you need just to at least get through that initial phase, to at least get the account. So you take the best possible setups, you know, the ones that give you like gut feeling, the ones which are like, oh man, you know, price has a very strong possibility of going this direction, and even if it doesn't, then I have no regrets. You know, you take trades with no regrets. That's how you prevent revenge trading. Because you see, when you take a trade, you're not fully committed to it and it loses. Obviously, you want to give yourself a second chance because you know you can do better. Deep down, you know you can do better. So here's the trick. It's when you take a trade impulsively, you're kind of almost like scratching an itch, you know, just to get into the market. And then it's only when the market gives you a whip, that's when you become more patient. That's when you sober up. You know, you sober up and now you're ready for the actual trade. But it just comes out of a need to take a position. That's why you normally force yourself into these situations where you're going to end up revenge trading or over trading. And it happens. It happens. It still happens. It happens to me as well. It's been happening to me of late, actually. But, you know, it's a, you know, we're only human. You know, these things happen. You're not going to be perfect in the market. You are going to want to scratch that gambler's itch every now and then. But the important thing is not to let it get out of hand and not do it when you're trying to obviously do a challenge. You know, when you're doing a challenge, you can't afford that gambler's itch. You have to find consistency first. I can afford gambler's itch, man. I've been trading the whole year. I'm already up for the year way more than most people are. You know, my gambler's itch is different from your gambler's itch maybe. You know, because maybe you're still in drawdown. Maybe you're still learning. So there's a difference. It's kind of like, you know, remember in school, there was always that one kid. He'd always fuck around with you. He would always like, you know, he'd always be doing these things with you. But when it came exam time, this guy was passing his exams because he was not messing around. So he was like in a different situation. You thought you're buddies and you're doing the same thing, but when he goes back home, he's studying, he's grinding, so it's a difference. So my overtrades and my gambler trades are different from beginner traders. So you have to limit the amount of those that you do. The reason I'm saying this is because a lot of us, you know, in the beginning, we see these traders that are taking like impulsive trades. When I first learned about impulsive trades, I wanted to take impulsive trades also. When I first learned about lower time frame trades, I wanted to trade the lower time frames also. But what I was not understanding was the level of maturity that was needed, first of all, to do certain things. Because I was watching people do it, people who are already like 5 years into their journey, 10 years into their journey, but I was just starting to do that myself. So it's like it was at a different level. So I didn't truly grasp the kind of discipline that you needed to really start executing on lower time frames like that. Because it can quickly get out of hand, you know, if you're not careful. So what it is for you, maybe you might be seeing a lot of people passing funded challenges. You know, maybe you might not understand fully how that person got to that point, but it's like it's putting the pressure on you that now you're feeling like, damn, I need to get this done. And that's kind of messing up your trading. Yeah, I'm a natural over trader. I'm already 5 trades in. Hey, this month we've been over trading for sure. 4 trades a day. Well, we gotta... Okay, that's a lot. That's a lot of trades. Yeah, this thing's consolidating. Consolidation nation here. Man, I wish daily was already moving up. You know, sometimes we get these Freaky Fridays where daily is already moving. Remember, drink more water, chat. Drink more water. Post on Discord 3 1-minute consolidation. Oh, and 2 of mine. There's one setting up right here. Man, I would have taken this. I would have taken this buy right now. If I got like a sense of direction, I would have taken this buy. I'd put my stop loss. I'll put my stop loss just below here. Oh, I want to see a candlestick break above resistance. I'll put my stop loss here and then close my trade if it comes into 35% drawdown. That's what I would do. And then anticipate a continuation. But also the previous day's volume is not giving me much confidence because you see, we didn't even trade. We didn't even trend yesterday. Like PA just moved sideways for the most part. Yeah, but I think this is a pretty nice. This is a pretty nice range. Also, you have over here. It could be like a market fade or a swing entry model confluence. Price came down, create a resistance, and then re-break the previous highs to continue moving upwards towards like 35.53. That'll be actually a really nice play. Range here is like 24 pips. Has a potential, and the good thing about that, it has a potential to run as well. You know, if that actually does play out, man, it has a very nice potential to run. Because if you get stuck in here and candlesticks start to move upwards like this, stops to break even, and then price has this next area, it can close above and then keep heading up towards this next zone, such as that. And we got some rejection wicks over here too. Man, those also look pretty decent. Pretty strong rejection zone. A few rejection wicks. Overall market sentiment is also bullish, so that's always a good sign when you're in line with overall market sentiments. Head and shoulders on the 15. Would have been nice to get a small little liquidity grab, but it looks like it came pretty close to breaking these lows, but it didn't fully break those lows there. Here, 1 minute. Yeah, you know the funny thing is this is again the same thing that happened in pre-London happened right here. It's like I like to think of it like those Russian dolls, you know, the ones that just get smaller and smaller and smaller. These dolls right here. No, that's the same thing. This is if you look at the structure and the way how long it took before the break and the kind of structure it was forming with a clean range on the left hand side, it's like a Russian doll over here because you go on the 5-minute time frame, and that's the same thing that happened all the way back over here. Price was consolidating, it was ranging for a bit, and then you clean traffic on the left hand side over here for price to correct that move, and it did the same thing down over here, but now on the 1-minute time frame. But you see, with this one, it had a bit more of like a shock in the water. Because price did give the... Actually, wait, no, I think this was fine because it did move down anyway. This moved down anyway. It filled up the range. It only came like about 4 or 5 pips from hitting the bottom of the range. So it is basically the same. Nice move. I think that was just profit taking. Profit taking and then getting out some sellers over here, unfortunately. Trapping in some buyers and then coming down. Coming down. Coming downtown. You see these moves. Look at what happens when it's a winning trade. It just goes like this. Sometimes you can get for the London session, like that's what you want to look out for. You wanna get trades which just go like this. I don't mind drawdown. Like drawdown pre-NY, pre-London, you know, I can take drawdown, no problem. But this year, what I've been seeing is these moves need to fly. They need to go in your direction almost immediately. Because the moment it doesn't go in your direction, might as well just cut that trade off. And save, you know, like 65%. 65% of your position. Just save it. Because the moment it does this, it's already a failed trade. So it said like the market will give us hints. Every now and then, it's going to always drop like a hint. And you always have to look at how you can use that to your advantage. See, right now, man, this thing is starting to push down here. Down 0.06%. We might still see a trending London session, chat. Like, I would not be fully surprised to see markets start trending. What do you think about NFP today? Let's see. NFP today, we have non-farm payroll. Let's see, 73. We're expecting 75K. We're expecting good numbers for US dollar, which means gold should move down. And it's funny. Yesterday, we expected good numbers for ADP. I think we got bad numbers. Let me see. I haven't seen it. Yeah, we got bad numbers. And then price moved up. Oh, we also got a revision here. Previous from 104 to 106. And then we got actual 54K. So we got bad numbers and then gold moved up. But today we're expecting good numbers. But you know, it's like this is the reason I don't like news, guys. Like a lot of us are not putting in the due diligence that we need to put in when it comes to news. So you see, the reason it's gambling. Like these things change. You don't know what's gonna happen. Like sometimes the sentiments, they just switch up. Previous gets revised, and you know it can be very confusing. But I would just say bearish gold. Bearish gold. If I'm just going off the forex factory sentiments, looking at bearish gold. Because it's an increase from 73K to 75K. Should be good. Good for the dollar. And we might even see that happen here because if you're looking at gold on the daily as well, like the daily is, look at how parabolic the daily is. Like this thing is due for some kind of a retracement. You know, eventually it needs some kind of retracement. We might get that retracement on the weekly today, if we're already expecting dollar strength, but it really come down to NFP. I think NFP will drive the overall direction on PA today. So that's why I'm under the impression that we're just gonna range until New York session time. And it's a pretty big range. From here to here, that's like 153 pip range. Now candlestick is breaking below the lows. Might be a little bit of a whip over here. Might see a small little liquidity grab, V-shape reversal back into the range, break the highs, and then maybe attempt to continue filling up this area on the left-hand side. So you want to be very cautious. If you're looking for sells, so be very cautious of this area here. Got a bunch of, you got a rejection, a pretty big rejection zone. You also got 8 SMA over there holding the hourly candlestick. That is if you're currently looking at sells. 4 hour also doesn't look as appetizing. You got a support right here as well. So it can be quite a difficult area to get through. I would say the path of least resistance is bullish at this point. Keep in mind like these small reactions. It's even 30-minute. The path of least resistance if price moves up. Yeah, it's going up now. Let's see, fake out 15 and now 5 and 1 minute. Let's see, we've got a small little tiny fakey over here too. This looks like, that's if it continues to move up, that is. Starts breaking these highs, then we can look at that as a fake out. You still always need structure and follow throughs for fake outs, because that's also something that people may trade. They might see something like that and then assume it's a fake out, but it's never really a fake out until it breaks some kind of a key structure and confirms that bullish momentum. So those days better not trading. Yeah, I would say until a market gives a bit more of a cleaner direction. Like you can still trade an NFP day. Like if we were trending right now 0.40%, I would be looking for buys. But right now you have to accept. The only thing is that you have to be accepting that you're trading a condition which is not trending. It's mixed bias right now. So like anything can happen. You can take buys, you can take sells. That's the only thing going into it, that you already have to accept that. Do you know about expiry options? No, sir. No expiry options here. Are there months that the market is more drama? 100%. It's like a relationship, you know. You're gonna have some months with your girlfriend or boyfriend that there's gonna be more drama. You're gonna have some days when there's gonna be more drama throughout the week. Yeah, sometimes the market can be super fussy. And then sometimes we can also be super fussy. These days trading gold is difficult. Volatility is too high. It's difficult, but at least it lets you know about your trades being positive or not, like much faster. So that's what I do like about the volatility. It gives you options for managing your risk very nicely. Like, if it wasn't for volatility, my trade yesterday, I would not have been able to secure 3%. But it was only because of volatility that markets pushed nicely in my favor. Then it's also because of volatility that yesterday I took small slippage on a buy. It's a good thing I reduced my stop loss. So I managed to get out before majority of the volume was coming in. But it still created some kind of slippage. So it's definitely a double-edged sword of volatility. But for the most part, it works out in our favor than against us, I would say. Very interesting zone below Asian low, 35.46, and then below PDC, 35.45. Let's see where these Asia lows. Asia lows down here. Okay, get Asia highs above. Asia low, Asia high. Maybe on the 5-minute, it would make sense for a sell. If it can get through that rejection zone, it's quite a sketchy area though. I don't think I trust anything below 35.47. But you do have like a support area over here. Price was to break below that support. There's about, a 33 pip range down towards that next support region. But it's something fishy about today. Can't put my finger on it, but I feel like something like this could happen. Like price could come down and then like come back up here into the range. Thanks very much. I was doing good every day, like 3%. I was 2% of my challenge, and then I lost my mind or something. Yeah, I think that's what happened. The pressure comes on. Usually at the end, towards the end of doing something, your mind can start to play tricks on you. And that's when the pressure comes on. That's why you shouldn't think about it too much, It's usually like this in sports or like anything that you do. It's always towards the end, like when you can see the finish line and you start thinking about it. Man, you can really mess yourself up. It's like, okay, so it's like when you're playing football, right? You're playing football, you got in through everybody. Now it's just you and the goalkeeper, and in your head, you're like, oh man, this has to be like an easy goal. So like you overthink it, you hit the ball and it goes in the wrong direction. You're like, damn. So that's why it's like, man, psychology is everything. It's not just strategy. Strategy will get you more than halfway there, but psychology is quite important. Hey, Moj, good morning, good morning. Yesterday, but November came. Man, I wish it was yesterday. I love this song because it always reminds me how fast time goes by. Because it was just last year and now we're already heading to November and it's the next year. Like time flies, time flies. You gotta make every day count. Especially like when you're trying to learn a skill like forex or trading, which can be very education intensive. You want to really make every day count, so you don't waste a lot of time, because time goes by quite fast. Even as we're just waiting for candlesticks to close, like these are little capsules of time over here. This like 38 seconds for this candle, 30 minutes for this candle over here. You can spend a lot of time doing nothing. That's why I always love the lower time frames, because you're gonna learn exponentially about how to read market structure. If you're learning how to trade on a higher time frame, see, you have to like get through these candles. You gotta wait 17 minutes to see what the next outcome is gonna be here. But on the 1 minute, you can learn quite fast about market structure. Just like I was explaining what happened right over here, was the same thing that happened above here on the 5-minute time frame. But this isn't, just because it's on the 5-minute doesn't mean it's a 5-minute play, because there's a lot of candlesticks that were hanging around up here. At least 2 hours. At least around 2 hours we were up here. But you just see it better on the 5-minute. But you see, it's like markets are fractal like this. So when you learn how to trade on lower time frames, you're actually excelling your growth. You're learning a lot faster. So I don't know, like some people think like lower time frames are low confluence time frames. That's true and also not true, because it's low confluence, but it depends on what kind of trading that you're doing, you know? Because obviously higher time frames, they say higher confluence because you're trading, that's where the realm of macro fundamentals and overall direction comes in from. So that's why it's assumed as a higher confluence. But it depends on what you're doing, you know? It depends on how you trade and what your style is. It's not necessarily a low confirmation time frame, as some people like to think. At least in my opinion, because I used to trade high confirmation timeframes and still take a bunch of losses. It didn't matter if it was on 30-minute, 1 hour, 4 hour. Heck, it could be on the daily. I would still be losing, no matter how strong of a confluence it is. You know, it's because the markets are fractal. And I used to take trades on the 15-minute, 30-minute, thinking higher confluence, and then be getting these losses. And the problem was I was also getting in late, you know. By that time, the price has already moved. You know, price has already moved because it's a very competitive environment, this is. You know, the market's not always going to give you the luxury to get in late and still have a profitable trade. Sometimes you do need to get in early. That's when I started looking at the 5-minute and the 1-minute time frames. You know, because these moves, they happen sooner. And sometimes the safest thing is to get into them sooner than later. Yeah, sometimes it's safer to get in sooner than later. Don't agree with the confluence. You're just trading what market is projecting, 5-minute, 10-minute, not 4 hours/2 hours. That is why I understand you limit the candles you see before the movements. Like price wants to break out of this area here. Got a nice little tight little range there in between. It's like 23 pips. So like basically the idea here is if a candle was to break above resistance, you know, there's two ways you can play it. You can play like an impulse. There's already, I think there's one in distribution right now. It's this area. That's not even the cleanest. I mean, you could make a case for it, but it's not really, for me in my eyes, it might not be the cleanest, but you can make a case for this kind of like earlier move over here. That's currently breaking out, just a small break and retest. Or you could wait for this larger move, which I think would look even nicer if it could create us one more resistance above here, if the next 1 minute can close bearish. But it's still definitely some kind of a sideways movement that's currently happening right now. So, you know, you get like two options. Two options, either to take an impulsive buy as you break above 35.51, or on the 5-minute, wait for a 5-minute to close above this resistance. And hopefully it gives like a very nice, easy close where you can even get in at the break of these previous wick highs. You know, it can become like a very tricky one, because sometimes what I've seen happen is it can close above that resistance such as this, and then the next candle breaks the highs, but it doesn't break the previous key wicks over here on the left hand side. Then the candle starts to reverse. So it's always nicer to get in later, but at least at a stronger confirmation. So it's like 2 minutes 30 seconds for this candle here to close. It's got 8 SMA support. This would be something that I would be looking to take if we were trending a bit. If we were trending a bit, I would be looking to take this closure above here, because there's a really nice range. Bottom of the range, we understand that this is all a rejection zone as well. Possibly even getting some sort of kind of like fakey situation. Looks like a fake out right here. Notice how the candles look like so, you know what I mean? They look very This is a bullish engulfing candle after such a strong move downwards. It's a bit suspicious, you know, and then breaking these wick lows just so when he closed back bullish engulfing, and then to start re-breaking these highs. That looks like a fake out because this whole zone here is also like 15-minute rejection wicks. But yeah, as I said, I'm not touching this thing until I see more trends. But that's something I'll be looking at though. Something I'll be looking at. Oh, we got 15-minute SMAs against us. 30-minute looks good. Hourly looks good. Oh, we got 11 minutes for the hourly to close. Oh, it'd be nicer for the hourly to close. So at least the next hourly, when it opens up, it can move up like this. And usually when you're in line with the hourly, it's much nicer. Because if you take a buy and, you know, this hourly is coming down like this, it's still got to pull up like this. It's much harder for it to pull up. So you might find yourself in like a bit of drawdown as that hourly first needs to close before the next one opens up to start moving in your direction. So I would say the hourly candlesticks being your favorite in Confluence is actually a really good thing to look out for. I think that makes sense, guys, isn't it? Haven't you experienced that for yourselves? Write a 1 in the chat if you have experienced that for yourself with being in line with those hourly candles. Write a 2 if it doesn't really matter for you. That if you think that for you, if you say if it's coming down, then it can still flip for you in your opinion. Because there are going to be these things that we all like share, you know. It doesn't matter if you trade ICT or Fibonacci. There's going to be these commonalities that we all share. You know, that's what I call like almost a universal language. That's why for me, my strategy is based off that universal language. You know, if it's consolidating, it doesn't matter what strategy you're trading. We can all look at this and agree that price is consolidating, correct? You know, that's the idea. That's the whole idea behind TFX concepts. Is the more obvious it is like this, you know, for me, sometimes the better. Sometimes the better. Especially with a range like this, it's not such a big range. You know, sometimes we have really unrealistic ranges to fill, but this is not such a unrealistic range to fill. And it just always increases the probability because markets just move in those 3 directions. It moves bullish, sideways, and bearish. So it's like universal. Problem is now you start to overcomplicate it sometimes and you try to do the opposite of what price is telling you it's doing, and then it can get kind of messy. Because you'd rather want to get into a losing trade, at least in my opinion, with price going in your direction, showing you like price is breaking certain wicks. But that goes against some sort of like, that goes against some strategies. Some strategies need to do the opposite. But for me, I like to do with what the market tells me. So if it's coming down like this and I see again it's consolidating, because you see it's happening over and over again. So 1 minute time frame. It happens repetitive. This is a identified repetitive pattern that now you got to look and see how you can exploit that pattern. Because you see, for somebody doing a funded challenge, you'd want to have the most repetitive, easy, almost textbook type of trades like this. Almost textbook type of trades like that. That's what you want to be waiting for. Those high confluence, easy to see setups. See, like something like this, this is building up to be quite nice over here. Man, that consolidation is looking beautiful. Beautiful. Maybe some kind of reversal to the upside. So tempting to take. So tempting to take. But I want us all to be on the same page. You know, one thing I've realized about streaming and trading, it's much better for me to even just take the trades that were all on the same page. Because, you know, it's all about building confidence. Because I'm not trading for myself, but, you know, it's good when we take trades that were on the same page. So it increases confidence. Because if I just start trading the way I trade, and then you're gonna always have like some kind of a fear. You know, it's like a bit of uncertainty. So we're trying to remove that uncertainty as much as possible. So every trade that we take, we're on the same page. But right now with this mixed bias, I'm pretty sure this chat right now as well is not feeling too confident about buys above here. Correct? And I've seen this behavior. It's like when we're moving in one direction, everyone is more on board with that direction. But when price is moving like this, it becomes very unsure, and any sort of like loss or win that can happen might always seem like a bit uncertain. So that's the thing we're trying to work on, is like building that confidence. And for me, it also for me, it also helps psychologically, because those are going to be the most highest probability trades that, you know, we can all agree on here. Because as much as there's no we in trading, we kind of like in a setting where it will be much nicer to have a consensus. It's going for the Asian lows first to test and pick direction, continuation or rejection. Asian lows are so far off though. We need to drop another 80 pips. Hope to be on your page though, but I'm not heard most of the time, I guess. I mean, you take a lot of trades, Salt Trader. I used to try and read all your comments, but man, you're like in a trade every 5 minutes. You're in a trade for like a few minutes and then you're out. You say something like buys 35.49 and then your price move, then you're like already out. So it's kind of hard to keep up with that. But if we're all on the, if price is moving in just one direction, it's a lot easier. Like because you know, it's a sentiment. Also, when price is moving, it's moving like directionally for a reason. You know, it's moving directionally for a reason. So most people are going to be geared towards that direction. And it's like, it's very cautious because, you know, during this time, especially during this time, you kind of need that directional bias. Because the reason is, think about it this way. Like, let me even just make it make sense, you know, because if you think about how volume comes in throughout the day, you could imagine the curve looks something like this, right? And the volume would start from Asia. It would pick up in pre-London, early bird catches the worm, and then London session, everybody's on the chart. You expect like London open fakeouts. Typically London open fakeouts and ranging market conditions as it waits for the next major session, which is the New York session. So you have pre-New York and then the volume starts to kick in again pre-New York, and that's when you get the daily bias. You'll have this situation happen most of the time. Like, this is the most general way of making sense of how volume picks up throughout the day. Most of the time you'd expect like it start from Asia. Asia can be a bit slow, but it can even pick up really aggressively throughout pre-London. And then London is always somewhat you never know. You never know with London. It will consolidate. But then NY is also notorious for obviously daily direction, because, you know, if you think about the daily, when the day starts as well, it could just be setting up for the first half, and then just like candles on the lower time frames, when the candlestick is about to close, it starts to have now its direction. You know, just like when a candle is about to close, it can be here the whole time. When it first opens, it plays around and then it gets some momentum. It might play with resistance, but when it's about to close, then it starts to have its pushes. So that's how you think about the higher time frame candles as well there on the daily time frame. Just trade like a speedbot and not a tanker. Yeah, exactly. Which side gold will move today? News of NFP. Now we were expecting good numbers, so bearish gold. Good numbers on the dollar. See, right now it's flirting with 35.47. 35.47 over here. Because also, if we're expecting bad numbers on gold, maybe it just comes down. That daily is about to flip as well. Daily's up plus 0.6%. It just needs to push down another 20 pips, and then you're going to get the daily flip. So it might be a bearish day to end off the week, actually, chat. That weekly candle, you see how much it's already done? This week is already up. Currently, we're up 2.88%. You know, maybe we could have a retracement here on the weekly candle as it's about to close. So just the same as I explained that volume, how volume reacts on the daily, so it's the same on the weekly as well. That's why it's called Freaky Friday, is because the weekly is about to close. And you've seen how candlesticks can be freaky on the lower time frames. How it can just... You've seen those situations where... Oh, price is dumping. where price, let's say, does liquidity grab, and then in the last minute, you're just seeing candles start to move up like this. And then it closes here after creating like a liquidity grab. So you even wonder, why was the candlestick all the way down over here for 90% of the time to only flip and close bullish in the last 10% of that candle being open? You know, so it's the same reaction you get on Freaky Friday, because the weekly also can have that similar sort of volume. And that's what creates these beautiful positions on the LTF. Sometimes you see amazing trades coupled with people securing positions for the weekend. I'm done for today. 2 losses. I'm still here as an observer. And why been good of late? Been giving the big moves? Yes, sir. We've only had, I think, 1 distribution for pre-NY this week. What happened yesterday? Let's see. Ooh, yesterday was crazy. Yesterday was really choppy here for New York. Holy. I've only seen 1 out of this whole bull run. I've only seen 1 pre-New York directional move. Or like good volume. Really good volume. Yeah, price right now is flirting with the idea of sell-offs below the support. Let's see how far the daily order moved since the open. Oh, we've already seen trending market conditions today. We just had a reaction off of that daily resistance. So I'd like to see, man, for me, I would love to see price move up. I would love to see price move up and then also look at some continuations above this area. So, man, it's just a waiting game. See, it's like testing this zone. It's thinking whether it's like testing the waters over here. See, it's testing the waters. Maybe it's looking for some sellers. It comes down to see if there's any sellers over here. And then maybe it doesn't get enough sellers and then it pushes upwards. ICT class that. Thank God it's Friday. Price after going higher on the week, it has dumps a little on Friday. Oh, ICT calls that. Thank God it's Friday. Price after going higher on the week, it has the dumps a little on Friday. Oh yeah. Yeah, there's some things that with price action that we're all like on the same page with, regardless of your strategy. Though those are the main traits that I like to see in any strategy, is that they share some. You gotta have a strategy which shares some sort of a universal outlook on PA. It can't be so specific to just the way you look at markets. What do you think that the last day or so ATH could have just been pricing in the rate cuts? So now over the next coming days, it could be going down, making supports then fly. Yeah, it could be. It actually could be because, you know, as we mentioned, price had already moved up like 6% over here. So we might see some profit taking. Maybe that's why we even saw in Thursday's previous candle here. That's why we got that dump. So we got a bit of profit taking over there. And then like that's gonna pull the market down and create more buying opportunities. We're getting so close. We have only one more weekly candle. You know, this next weekly candle could just range actually. Might just see a doji candlestick. But we'll see how that NFP data comes out and then how that reacts in the market. Trap now, you think? Careful for sellers. Yeah, this candle will need to at least close below support and then re-break its lows. There's a bit of uncertainty to how the candles are behaving on that level. It's like it's thinking about it. A lot of hesitation. I think it just skyrocket any minute now. Fake some traders out. Well, that's a problem with mixed bias. It's like you just don't know, you know. You just don't know. It's right now the daily is almost about to flip 0.06. You don't know the true intention of price. I think it can skyrocket here if it wants to. It's already dipped below these lows to grab some orders. Just re-break these highs and fly. Nice 1 minute console now. Yeah. It could just break the highs and then skyrocket. But you see, it's like an uncertain. It's like it could happen, and if it happens, awesome. But it's very uncertain. So that's why it's like these trades, you know, if they break highs and since start give you like drawdown and a hard time, it's better just to get out because of uncertainty. There's no consensus here. It could play out, maybe not, maybe it could. Best thing, your best friend is always risk. Because you know, if you get into a trade with your risk already predetermined, so you got your stop loss down over here, and you already know that you're closing at a 35%, let's say something like this, it doesn't seem so bad. It kind of relieves the pressure a bit more. It relieves the pressure because you know, if you're risking like 1% here, let's say even risking like 500 bucks here, you know, maybe worst case scenario, you're gonna lose like maybe 200 bucks, maybe 250 bucks, something of the sort. You know, you're managing your risk. You're gonna save a lot of money here. So instead of risking 26 pips, in reality, you're risking about like 9.3 pips. Shifts your whole perspective on trading and risk to reward. Because like that's a 0.91, but if you were to close here, it would be a 2.62. But at the same time, you're losing less if it goes against you. So you know, you're always gonna have risk as your best friend in trading. You gotta find ways to manipulate the risk so it works more in your favor. Because you can't manipulate where price goes. You can't control that. Price can move up or it can just move down like this, you know, thinking it's gonna move up. Look, it's moving down now. It might break these lows. Didn't break these highs. It came pretty close to breaking these highs. It didn't break these highs here on the left hand side. You know, it just rejected at this price point, 35.48. Now it's coming down and flirt with this support. You see, you can't control where the candles are going. The only thing you can control is your risk. So always think on how you can make that work in your advantage. A lot of the times we're putting too much emphasis on where the candlesticks should go. But you can't even control that. So it doesn't make sense. Why don't put the SL on 35%? Because, you know, you're not coming at it from... you could if you wanted to, but you say at the same time you're not managing a risk. You just take a full loss. You just take a full loss. And if I'm going to take a full loss, I'd rather have it break some structure. You know, I'd rather have it shift. Like, you know, let's say you take a sell over here, for example, and then price breaks above these highs. You at least know that the trade idea is wrong because it should never have broken those highs if it was going to move down. Because the reality is sometimes price doesn't always move in your direction immediately. But it should respect the structure where you put your stop loss. Something like that. You know, so if you're going to use 35%, it's a different approach. You're just looking to catch these types of moves, which just go straight down in your favor like this. Because those moves happen a lot more often than you think. You see right over here as well. Those moves happen a lot more often than you think. Okay, let's just actually experiment. Could you have survived this little break? Let me see. Boom, boom, boom. Da, da, da. Take a buy over here. Like this. Stop loss below here. Yeah, just giving it enough room. Let's say 35% from here to here. Yeah, you could have survived it. Because your best trades are never gonna give you that hard of a time. Even if you face a little bit of challenge, a little bit of drawdown, it's never like, for me, what I've experienced, my best trades, even the ones which give me a bit of drawdown, they never really go like super deep. Maybe they're just gonna come exactly like this. They're just gonna flirt around this area and then go. It's always the ones which go deep. You know, those are the ones where it's like, if I'm gonna accept that additional drawdown, it needs to be in line with time. Like sometimes I just use time more than just how clean the setup is, because I'm like, okay, this time I've seen this candle, it just keeps moving. You know, and that's a habit that's been kind of like ruining me in September here, because I got so used to doing it. It's been working out amazing, man, especially in July. In July, I made like 51%. You know, like the timing was even more important than the setup. So I got so comfortable since July timing. But you see, now the timing thing, I got to be very careful here in September. But for the most part, it does play a very, very important role, the timing, because, you know, the market's going to decide that it's time to move. There's a reason I also took this sell over here this morning. It was like an impulsive sell with very minimal analysis. Is because if you've been consolidating for a long time and it's breaking pre-London, it's a pretty high chance that it's just time for it to move. Less to do with your setup, more to do with the time. So when you're closing at 35%, you're just going to be very cautious. Very cautious. How do you make that total of 35? This is a Fibonacci. It's a Fibonacci. Oh, wow, look at this. Your sell trade is not on your table right now? No, it's not, because I didn't send the signal out for this. The only ones on my table are the ones where I send a signal out. Those are the only ones. It can take the previous daily highs and reflip after the news and go lower to end the week, I think. Man, look how volatile this is. Looking like a liquidity grab over there, the way it's behaving. It's quite an aggressive move for it to push up like that and then come down. You see, for example, like even in a situation like this, if you take a sell over here, you wouldn't expect this to come back up. This, like a good trade, should just move straight down in your direction. Because the moment it starts to come back up, you get a better chance of like being caught in choppiness. You know, so you want to give it a bit of room to breathe, 35%, but that's not what you want to see. That's not what you want to see. You don't want to see such a deep drawdown like that. You know, especially after a grab like this. If this is a good trade, it should just move down. It should just move down. That candle should not be coming back up like that. Let me actually see how big it... Okay, so it didn't break. It didn't give a solid break yet. It missed it would be nicer to get a little bit of a solid break, but it still broke nonetheless. You know, it should still move down. Shouldn't give a hard time. Those are the trades that I really want to avoid. It's looking quite nice. So re-breaking these previous 3 wicks over here after such a liquidity grab on the 1 minute. Got that 8 SMA, just need to push it down, very much clear these lows out. Because otherwise you just get caught in this choppiness. Daily is down up 0.04%. It's like the daily doesn't want to flip. It's fighting on that daily flip. Because if it follows through from where we're currently sitting at, that should bring enough volume in to give that daily flip. So it's in an important area there. Watch it skyrocket. That's the reason I don't want to trade it, because it's like it's so uncertain what it wants to do. Because some people want to see it sell, you know, at the same time, people think maybe this is a good idea for it to skyrocket here. And also, you can also read in the candles by just the way it's behaving. You see this volatility? That's actually, we can monitor this. You see this volatility? So uncertain what it wants to do right now. So that's when the market gets really dangerous, when it starts to do this. When it starts to chop, and you're gonna see the chop with a lot of the wicks. Forming a lot of wicks. Because, you know, why doesn't it do that here? Why is it so calm? Why is it so calm here, for example? You know, it just breaks, small pullbacks, and then it just keeps coming down. But look at what it's doing now. You know, it's a difference. It's a completely different environment. Yeah, it's the same setup, but it's a kind of different environment over there. So if it breaks lows, you really want to see it move. It needs to like clear this whole zone out. You don't want to see it hang around there for long. Because I've been in trades like this before, where I've had like my stop loss, you know, where I have my stop loss in structure. And it's like, if it's doing this, I've been in two versions of this, like where it's like this, and when it breaks, man, it breaks and it just goes really nice, because it's been hanging around here. It's been like volatile. So when it breaks, you see, exactly like this, like it breaks, but then it needs to keep going. It needs to just keep going and say, okay, we've confirmed the direction, like this. You see what's happening right now? That's the break that you're looking for. That's the one that you want. So it just can keep following through. But the moment it starts to pull back upwards, man, that's the moment that trade is going to have a high chance of stopping you out, because it might just be also grabbing some orders in an area which you cannot see for yourself. So if it starts pulling back up, it pulls back up fast. It pulls back up aggressively. So, you know, that's the whole idea of the way you're going to be looking at risk. You see those really good ones? It should not come back up. It should not be pulling back up like that. That should just distribute. Simple. Makes sense? I think it makes sense. See, like this? See how that volume is coming in? So there's exactly like two types of these moves. When you see it hesitate that much, it's like anxiety that builds up, and then it gets distributed. And it can work out so beautifully in your favor, but the moment you see that drawdown and it comes in, it usually comes in fast. And that could be a much higher chance of a losing trade. So this is a different environment than something like this, for example. You see here, it's like more gradual. You know, also like here, for example, here it's like more gradual as well. It's more gradual. There's not a lot of hesitation, uncertainty. Like, it's just moving normally. So there's always like difference in the types of trades that you take. You see now it's pulling back up. Those are the pullbacks that you want to be cautious of. It's already pushed here about like 15 pips. Let me see if this other area would have survived. Oh no, it would have hit that and then hit 35. But that didn't give a strong break anyway. Let's see, funny. Oh, you missed it. You missed your entry by a little bit. But what happened? What is this? Is this take profit? Now you got your break even. So this is your take profit. Yeah. Let's take profit. It's crazy. It's volatile. It's super volatile. TP by 1 pip, then to BE. Oh, that's annoying. And then now watch it. Now watch it hit the take profit now. That's the double-edged sword about the type of volatility like this. Is the take profit. Man, the take profit's always like tricky because it's so volatile. Sometimes it's too quick. It's so quick. Like sometimes I see it hit like $1,000, 1,100. I want to close 1,100, but like it pulls back in literally a freaking millisecond. It's like you have to close even before it makes a push to actually catch it at that same exact moment. And that's just the market just fucking with you. You know, it already happened to us once. Like take profit was what, 0.3 pips away from being hit, but like it was impossible to close like exactly at that point. And then it came all the way back up, hit my break even, and then went and hit the take profit. So that's the only issue with such moves like that. Like you just gotta be very cautious when the volatility and the 1 minutes are moving like and fluctuating like this. And it's good for experience because the more situations you find yourself like trading a strategy and you better understand the different environments, you gotta understand how your trades should play out more often. I should have known to not trade this zone. It's the Asia lows, but this is not Asia lows yet. Asia lows, what Asia lows are you talking about from the previous day? Not even. Asia lows are still down here. 35, 39. 35, 39 Asia lows. These are only SL hunts. And look at the way it's moving. They have like a shock in the water. Setting up a reversal confirmation if it breaks above these highs by 35.47. This thing's skyrocket. This thing could skyrocket right now because when it has a move like that, typically, you could imagine in such a scenario, you have sellers in the market. You got sellers in the market when price usually pushes like that. You can assume people looking at sells. Let's see on the 5-minute. Candlestick closed below support. Jeez, it's so anxious. It's so anxious right now. The daily is plus 0.03%. Yeah, if I was a seller and this thing did that, holy, that's a whip right there. Damn, look at this. Oh my days. What's going on right now? Is somebody talking? Maybe someone's talking. But I doubt anybody's talking. These are like pre-NFP jitters. Japan's PM is Shiba. I will compile economic measures in autumn. It's 341. That was a while ago. Man, those are the worst trades. It's good if you can get in and out fast, but if it doesn't follow through, worst condition to be in. Jeez, look at it. It's like Powell is about to talk. This is how price behaves when Powell is about to talk or numbers are about to come out. Market is really crazy on the 1 minute. Yeah, you can see it better on the 1 minute, but of course it's happening on all time frames because look even at the 5-minute. You know, there's a pretty rapid move. It's not just because we're on the 1 minute. Also, just to be clear, these are pretty rapid moves. They're affecting everything. Even the 15-minute, I think, had flipped at that point. 15-minute had flipped to create those highs over here. Then it's like flipping back down. So this is not normal volatility. This is just risky. There's like different volatility. This is more risky volatility. I think this is the volatility that people think is associated with a lower time frame. Because when people think about lower time frames, I think they imagine that that's how it feels like to trade a lower time frame. Someone who does not actually trade lower time frames, like the 1 minute, they assume that this is what the lower time frame does. That it moves so aggressively and wicks like this, which is not the case. Pre-NFP jitters. Friday is always fun. Yeah, Friday is always fun. And we haven't seen a distribution yet.
Why are you running?
We need to see price start running in a certain direction. Because you see right now what it's doing. It's like you can imagine quick scalpers, like hyper scalping almost in a sense. But it hasn't given a distribution where you can actually look at it and say, oh, you know, maybe someone right now is getting paid. Maybe we're going to see that when markets are move like this. Then that's going to be the real distribution. But right now, this is... You can still make money in these moves, but it's like in and out, in and out. I don't know why I'm laughing hard when I see this behavior from the market. Maybe this is how you feel right now. Wait, let me find that scene. This is how you feel right now. It's like a... Maybe it's time to clock out. No, they didn't add the scene. The full scene is... Doesn't he hit that a phone? No, he hits that clocking out machine. Then is... Oh no, this is a different scene. He hits that clocking out machine. And then it's like... You know, that scene was so awesome because... It was an improvised scene. So basically, that wasn't part of the script. Where the hell is it? Yeah, that wasn't part of the script. Sometimes actors do these things which are not part of the script and they just make the scene so much more unique. Yeah, but that's Freaky Friday for you though. Man, on Freaky Friday, you kind of feel like that. You kind of like lose your mind a bit because the market just like no matter what you do, it can be so hard to catch a move, you know. And looking back at it in hindsight, maybe you think you could have caught it, but you couldn't have caught it because a lot of people just get those whips. Yeah, Joker was a brilliant movie. Joaquin Phoenix. Man, this guy's acting range is on another level. He also made Gladiator. Man, his acting in Gladiator was top notch as well. He was on a interview with Jimmy Kimmel. Jimmy Kimmel makes a joke that I'm sorry Joaquin Phoenix couldn't join us here today. Because, you know, he's sitting right there, but Joaquin Phoenix is a method actor. So he basically lives the lives of the people he's acting. It's like, it's freaking brilliant. I don't know what happened with the second Joker, though. They completely botched that one. It's like making a Titanic 2. You can't make a Titanic 2, you know. You should just leave some things the way they are. I was about to get in a buy, but... it did that pop and back in so it can F off. Now I think I'll sit today out. It needs to move. Usually when markets are this volatile, it just needs to get out of this zone. You know, it needs to push. Because this is where all that uncertainty is. But once it pushes through it, it should start clearing up again. It was due for a figgy. So this should actually be the distribution. If it's going to be a clean move up, this should actually be the follow through. You watched the second one? No, I didn't even watch the second one. It looks so bad. I trust reviews. When I see a movie get like a shitty review and I can see like how the trailer and everything is, I don't even bother. Because it was like a musical. Some movies, if it's a good actor and it has a bad review, like maybe a 5 or, you know, something like that, I'll still watch it because it's a good actor. But something like that's been put on such a high pedestal like the Joker, it has a lot more eyes on it. So if you get really bad reviews on it, there's a high probability that it's just a shitty movie. It's not gonna mature with time, you know. Like when Scarface came out, Scarface had bad reviews. People didn't like Scarface, but that was a classic, you know. It's matured so nicely with time. It's become a good movie. But I don't think that's gonna be the case with Joker. Yeah, don't waste your time. It's so bad. That scene was so nice. Like he just clocks out. I forgot to clock out, and he hits the thing. Man, that's how obsessed you have to be with your craft. No matter what it is that you do, you have to have that level of obsession so you can get as good as possible. Because if you're not gonna do something to be the greatest, like why do it anyway? You know, that's what I mean. Like why half-ass something? What's the point? If you're passionate about something that you do, like why half-ass it? Just find ways to do it like to your greatest ability, especially if you're planning on doing it for the next, you know, 5, 10 plus years. Fun fact, they actually done Scarface twice because the first one flopped. Haven't heard that. Thought they only had that one movie. That's interesting. What, they reshot it? That is a fun fact, if it's the case. They can never make a Scarface 2. Because it will just be like Joker 2. Or Titanic 2. Or Snow White 2. (1932). Oh. This got a 7.7 though. Oh, nice. It's Tony Montana. Gaffney. It's like, I guess it's kind of like what's that other movie? It's also based on like a much older text. The Great Gatsby. You got the original one, and then you got the one with Leonardo DiCaprio. I actually read the book first and then watched the old one, and then there was the one with Leo. But I think if you watch the Great Gatsby, definitely watch the OG one. The OG Great Gatsby, I think it's still better than the one with Leo. It's a goated movie. Hey Vic, I'm struggling with staying consistent. I've been trading for some years, so how do I stay consistent? It's all about finding a routine, isn't it? Consistency is just about routine at the end of the day, if you think about it. So if you already have like a strategy, you must follow your rules. I think the problem you're struggling with consistency is because you don't have that playbook. You don't have a strategy. You might not have yourself a good routine in place, like times you should be trading, what you should be looking at. That's consistency. So it's just in the routine. You gotta set yourself a routine. So you see, like the answer to these things are normally just in the basic understanding of the word consistency. You know, what does it mean to be consistent? It's to be organized. You know, that's why you got inmates. When you go to jail, why do people go to jail and they come out big? They come out ripped from jail. It's because they have a routine. They have a time. They sleep at this time. They eat at this time. They have rec at this time. So every day, it's easy for someone who goes to jail to come out looking big. You know, because if that's what they're doing is they're working out, every day is a routine. No matter how bad they want to sleep in or do something else, they can't. They have to stay on that same routine. And your body transforms with routine. Your mindset transforms with routine. So you need to develop yourself a routine because you have so much freedom. No one's holding you accountable, you know? So you got to do whatever you want. Today you don't want to do this, you don't follow your rules, you don't want to do that, then no one is going to tell you anything. So, you know, you got to have that discipline first to create yourself that routine and then stick with it. That's how you're going to find consistency. But if you don't have a strategy or anything of the sort, then what happens? The market kind of plays with your emotions. You know, it moves down, you want to take a sell. It moves up, you want to take a buy. You don't know exactly when to stop trading. And at that point, the market kind of controls your emotions. So as it's moving like this, you're always looking for trades. So it's like you're a rag doll and it's just going to play with you like this. You know, and you see how aggressive that the market can be. So that's what you got to determine. If you're going to trade pre-London, take that one trade. Take that one trade that's in line with your playbook. Then that's it. Don't hang around too long. And then move over to the next time that you're trading. Take that next trade. Don't hang around too long. You know, maybe you overtraded here today. Now you took a sell over here and you decided you want to keep holding this trade. Then at this point, just accept that and then just call it a day here. You know, but don't be looking for opportunities at every corner. That's when you're going to get scammed. That's how people get scammed. Like when they're looking for opportunities around every corner at any cost. So don't waste your time. So do you recommend to go to jail so I can come out ripped? Or it's just an example, because most people, like the ones who even come out ripped, maybe they don't have like a disciplined mindset that they couldn't achieve that in the real world. But because they're in prison, the body transforms. You know, and it transforms based off of the habits that you pick up. Like, for example, have you seen how Blueface looks? This rapper Blueface, man, look at his body transformed. I don't know if it's like for the better. I don't think it transformed for the better. But his body completely transformed. You know, because when you're put under a certain routine, he kind of looks what is that word? Bulked? He kind of looks bulked. You know, because outside of prison, he looked very different. Like he was a lot smaller than this. But it just shows you what happens with consistency. So, you know, if you have bad habits, that's going to compound on top of each other. And you're going to have bad results. You know, but when you're put in a setting now where that you have to be disciplined, or you put in a setting where you have to have a routine, it's either going to compound positively or it's going to compound negatively. That's why some people, they can go through such a situation like prison and come out better on the other end, because they're like, okay, you know, this can go two ways. I can either lose my mind here and become like unhealthy and depressed, or I can go this other route where I'm going to take care of my body, I'm going to read, etc., and just get the good habits that I can. So you kind of get forced into a situation like that. But it just shows you the power of having routine. That's what routine does. Routine makes people into what they are, like whether they're going to be millionaires or or not. It's all based on routine. What are you doing on a day-to-day basis? Like, where are you heading? You know, that's the important thing you got to ask yourself. Where are your routines that you've set for yourself today? Where are they taking you in the next 5 years? So look at yourself today and look at your routines. Where is it taking you in the next 5 years? You know, are you just playing video games and then eating junk food? Like, now imagine that compounding over a time of 5 years. Or are you working out? Are you reading? Are you learning new skills? Now imagine how that's going to compound in 5 years. So you got to be very careful when it comes to building systems. Because a lot of us, we do these things, we don't know we're doing them. But when you start journaling, man, every day if you start journaling and you start looking at how your day is going, where your money is being spent and all of these things, you start to see the routines. You know, and then the same way as you got to see the routines in your trading, the bad habits. Why are you losing? You know, just the same way if you're looking at your finances in the real world, once you start looking at them in detail, you're going to understand, oh, money is going out here. Maybe it doesn't need to go out here. You know, and then you can patch that up. You patch the bleeding or you stop the bleeding. That's why, you know, trading, when people say it's like a business, it really is like a business. But your greatest asset is psychology in this case. That's the number one thing that you have to protect. And that's why traders at hedge fund levels, they have psychiatrists. They have these psychiatrists who help those traders on the floor. Because it's the greatest asset to the company is the trader's psychology. Because you could be a great trader, but if you face like a losing streak, you might not be able to execute anymore. You might become fearful. Yeah, so you also got to keep your risk at a level of risk. I always try to do 1 to 2%, roughly around this much, 1 to 2% per trade, because that's a risk my psychology can understand and allow me to get into trades that I need to get into. But if there's a setup and I'm risking, let's say 5%, I might not take this trade, which was supposed to be a winning trade, because now my psychology is messed up because of how much money is on the line. And that's a reason why a lot of people fail challenges as well, because they're not used to seeing the fluctuations of higher numbers. So if you do like a challenge, you got to do an account, which is going to be the same amount as a challenge. So if you're risking $500 a trade, you already have to be simulating with $500. If you're planning on trading for the first time, correct? And this is what I also did. If you're planning on trading for the first time and you want to deposit $500 into your account, but you're on a demo, trade a demo account, which is $500. But what a lot of people sometimes do is like they trade these $10,000 accounts, $50K accounts when they're going to be depositing $500. So there's a misalignment in terms of the perception of risk. One of my friends did a little sit down in the cave, in the cage. When he got out, he was huge, but so quick to flip out. Watched him batter a few people. Had to have words to tell him to calm down. That's crazy. Hey, Paul, thank you for the sub. March start to the week and month. Let's see how a month ends. Yeah, it's garbage. Garbage PA. It's like what I'm anticipating is this is going to range. Range till NFP. Let's see some of these charts. Find trader server. Yeah, we need this. We need this one for TFX, but we need to boost the server. If we get enough boosts on the server, we can have a TFX emblem. Come on, guys. One of us. So instead of my normal 2136 contract on a trade, I used 213 contract. I forgot to press 6. I guess you can say it's a typing error, but it still hurts. I can say you made $1,500. That's nice. What's the problem? You made some money over here. Next time, you know, it's gonna happen again. If this has happened to you already once, this is going to happen again. So you have to find maybe sometimes you can use tools that help you insert the lot sizes correct each time. Like the magic keys are pretty nice. They kind of remove those errors, or you can download some softwares if you're always changing your contracts like this. Because in the heat of things, you know, when things are just moving, we sometimes are not thinking so clearly. So there's a chance that that could happen again. But you kind of want to reduce this situation from happening as much as possible if you can help it. Sorry for posting here, but can't in performance channel. That's last 24 hours. Oh, nice. Last 24 hours. Pretty decent curve. Fourth trade. Consolidation. Breakout on the 1 minute confluence. SMA 8. 1 minute RSI oversold. Yeah, that's a consolidation breakout. This would have been nice to wait for. Definitely this candle here to close and then get on the break of the highs. To avoid that situation again that can happen where it just... Because, you know, this support yet is not yet fully formed. So in this scenario is good because the next candle did break the previous highs. But that support was not yet formed. So this next candle could have easily just ripped back downwards. Second, try to go back full range, no luck. Got out 0.3% here. Third trade didn't even try and close at 10 pips. So you never really miss a move. You still manage. Oh, but you took a... Was this a buy? Because if you missed the first sell here, I'm sure there was some kind of a re-entry as price was moving down. But this was the move. Yeah, this was exactly the move that I took as well. Dun, dun, dun. There was a typing error. Typing error, at least for less lots, is better than more. The worst is typing error, like more lots. Instead of a 1 lot, you put in a 10 lot. Then price moves. Oh man, imagine. Imagine you take a buy here. Instead of a 1 lot, you put a 10 lot. Then price moves down like 8-10 pips. It's still got that clean range here on the left hand side above 35. Let's say 35.50. 35.50, break above this region. Still got about 23 pips here. Then this is another consolidation that has created a support. This is going to become a no trade zone. No trade zone. Need a candle to stick its head out like this. You know what that's going to create? Can anybody say it in the chat what this will create if this happens? A potential... Let's see if anybody gets it. Because remember, if someone talks to you about a red car, you start to see red cars. Volume? Yeah, we'll see volume. What else? What else will we see? You got a fake out? Yeah, it is fake out. It is a fake out. But what can you anticipate to see? Like, what would you anticipate? That will only be something that is part of your confluences. If it's not part of your confluences, then maybe you wouldn't anticipate it. But you are correct though. Volume, fake out, breakout, breakout. Everyone's correct. I was just looking for that one specific thing. Yeah, exactly. Here we go, Vikrant. Inverted head and shoulders. Because that's going to be the thing that shows you potential volume coming in. Inverted head and shoulders. That's one volume confirmation signal. Inverted head and shoulders will be right here. If this candlestick was to start to move up like this, that will become the left shoulder, head, right shoulder. Then we'll also have the SMAs. I guess SMAs should be supporting price action a bit. Consolidation breakout. Now it seems more of like most likely what it's going to be because price has already moved down. That's a problem with trading inverted head and shoulders just as a signal itself, because you're always thinking it's going to be the one here, and then you get a situation where it just comes down and then flops. Because it's not a good idea to trade patterns just by themselves, at least in my opinion. But it looks more of like it would be a breakout, because I have this candle's closing down here. Maybe next candle starts to do this, then it's just going to be an accumulation phase to see price break above now this resistance over here to continue moving up bullish. I actually did a small little shotgun entry here of sorts. It's a small tiny range, about like 15 pips. Small range that just got corrected. Like mirroring this PA. Push up, sideways. Kind of like small sideways over here. Sideways channel. Push down to correct this. Not the cleanest version of this. The same thing as this. Or up here. But it's not the cleanest version. It looks a bit odd. But it's more or less the same thing. Little sideways movement. Looks a little odd because it's more stretched. It's not like textbook, but it's kind of more stretched up and down. But it's similar idea. Clean range. Left hand side got corrected. Happened to me yesterday. I entered 5 instead of 0.5 lots. I hadn't noticed until I saw weird money. Anyway, it was a good day. There was a drawdown, went straight to profit. I closed immediately. Oh, that's lucky. Yeah, usually in that situation, if it goes in your favor, you know, awesome. But if you realize that and it's in drawdown, the best thing is just to close the trade. Because that drawdown just increases. Most of the time, it will just keep going. It increases and increases and increases. And at some point, you're so committed to the trade that you don't even want to close the drawdown anymore until a little bit of a break even. And that's the reason why some people, they end up in these really shitty positions. You know, where they're taking drawdown, so much drawdown for no reason. So it's better to lose even like 2% and then close it and say, damn, that was a mistake. Even if it goes back into your direction, then just keep holding it. What time what time you took the sell? Oh, that was the drop over here. This was at 2:05 a.m. Eastern. But it was just that pre-London drop. This to me, this pattern over here holds a lot of significance to me based off my experience, is because even before I knew what I was doing as a trader, I used to trade GJ, and GJ used to sometimes during the pre-London session do patterns like this. It used to consolidate so heavily, and then I would just see GJ dump, and it would just keep dumping. And during that time, I was trading retracements, so I would be waiting for retracements, but I would never get the I was trading retracements, I think, on the higher time frames, like maybe the 5 and above. So I would never get the candlesticks to retrace the way I would like to see them retrace. And I remember feeling so much FOMO on those days. That price just kept going without me, and I had no idea how to catch the move at that point. So I just think I just missed the trade. And then, you know, that pressure builds up in you that makes you sometimes take a dumb shit trade later. Because you don't know what's really happening. So this is a specific pattern that heavily resonates with me. That's why I say you're also going to see, you've seen it today. You're probably going to see it again, like, soon. You're probably going to see it again soon. It's such a specific volume play, you know, like when price stagnates for a long time in a important time in the market. When price stagnates for a long time and starts breaking at an important time. And then distributes heavy. Distributions are usually heavy from these patterns. And some of you already know this. Some of you already know this scenario. Some of you know this scenario. Man, where is Goldie going? This 5-minute range over here. Let's see from the support. It still has a little bit of leg room to come down. It's got like 23 pips. Yeah, pretty important area this is. See, I broke down below volume. Daily is at 0% right now. So that daily is a doji candlestick. It's just about ready to flip. And look at it. This is what I mean. This is why I'm not taking any trades, chat. There's no direction. You see this? This is like a mixed bias. Anything can happen. It can move down. It can move up. Let's see news. European stocks rise. Long data yields ahead of US jobs data. Can't open that. This is not working. Let's see. GJ is still underneath 200. I say more Bank of England's man. I stand ready for forceful policy action, including larger, more rapid rate cuts, should downside risks to demand materialize. Whoa, pound's looking at rate cuts. Bank of England's man. A more persistent hold on bank rate is appropriate right now to maintain tight, but not tighter policy stance. But I stand ready for forceful policy action, including larger, more rapid rate cuts. So a lot of indecision, that's what I'm getting. Partly the reason why we can't even break above 200. Okay. European stocks rise, long dated yields ease ahead of US jobs data. Let's see anything interesting. Markets are all but certain of a quarter point cut at the conclusion of Fed's 2-day rate setting meeting on September 17th. We have already seen yesterday the sign that perhaps there will be a weakening in jobs, paving the way forward for a done deal in September. I mean, like, it's that simple. There's not much we can read into these interest rate cuts, to be honest. Like, we're expecting interest rate cuts. Okay, perfect. We're expecting dollar to go down, gold to move bullish. All right, awesome. You know, you can't really read too much into it. I mean, that's about it. Now we just wait for Powell to come on, say what he needs to say, and we're off to the races. We'll see how the market reacts to that when the time comes in like 12 days. See, gold edges higher in early Asia trade. The precious metal recent rally took a breather as traders await the U.S. non-farm payroll data due later today. The data should help shape the Fed rate path trajectory. Man, it's like, this is the only word that's been in circulation. It's just Fed rate cuts, Fed rate cuts, Fed rate cuts. Nothing to do with geopolitical tensions, nothing like that. Man, you see that video of Putin and Kim Jong-un and Chinese president when they're walking and talking? And they're talking about immortality. Oh, man, look at the volume. Little bit of a fake out, inverted head and shoulders. You remember what I was talking about, that inverted head and shoulders that was happening on the 5? Was it the 5 minute? Yeah, on the 5 minute over here. Remember how I said, like, what are we expecting? Everyone was correct. Fake out volume. But it was a pattern I was looking for. So if you got that candlestick, if you had that candlestick, that would have created that inverted head and shoulders. Correct? So it's like the same thing that you're seeing happen right over here. So that was to be the right shoulder, anticipating volume to come in. And you're also correct to say that's a fake out too. That would be the head. Yeah, but back on that, man, they were talking about immortality. They were talking about how you can replace your organs and you know, you can live up to even 154 years, and 70 years old is still young nowadays. Still pretty young to be 70. Man, these world leaders, it's the formation of the USSR again. That's what's going on there. They're going to be going against America. Man, it is curtains for the dollar. It is curtains. Putin, Kim Jong-un, and Chinese president Xi. Oh, that's over. It's game over. If they went to war, I mean, come on. Trump was so sad. He was like, well, you know, Trump acts like such a baby. It's like, well, I hope you guys enjoyed your meeting and everything, and that now you're conspiring against the United States. It's so funny. It's like politicians sometimes behaving like children. It's like when your friends start to hang out without you. And you get passive aggressive about it. Because Trump definitely does want to be part of that clique. Trump is like the guy who wants to be part of that clique. So friendly with Putin when everybody says he should be so much harsher with him. Because he wants to be like them. He likes that control. Trump is a guy who loves that control. He doesn't like democracy the way it is right now in the States. Because he feels like he doesn't have enough power. He wants that lack of independence with organizations so he can have more of a say-so. So, man, he looks at these other people and he envies them. These are the presidents. You felt sad for Trump at that time? Yeah, it's not looking good. But it's quite interesting to see what these world leaders talk about, huh? Immortality, living forever. I guess that's always been the goal. Nobody wants to die. Especially if you spend entire of your life just acquiring so much wealth. Probably want to live forever. You know, that's what Alien is about. The new Alien series. It's about now the world has been run by certain corporations. It's no longer run by governments. This new Alien series. It's run by corporations. And the richest corporation owns the world. And it's all about like, you know, also living forever. Like there's this new technology where you can transfer consciousness into different bodies. It's actually a pretty nice series. I think it's on episode 4. You know, this is what rich people just want to live forever. If people like Paris Hilton says when she dies, she just wants to be frozen. I remember that from a really old episode, but anyway. Right now, price is not moving anywhere, chat. And there's nothing to do. There's nothing to do over here. There is nothing to do. This is a whole no trade zone. The only other trade that will be coming will be buys above resistance. This is the only time that I see that price might even have some form of direction, is if we can break above that resistance. I don't think so. Trump's a billionaire. Envy isn't. Billionaires get envious. 100%, man. Billionaires get envious. You know, like the space race that's going on right now. Don't you think there are billionaires also in that space race? 100% they're billionaires. You know, you have to be a billionaire to be in the space race. There's a lot more companies just, instead of Starlink, there's a lot more other companies also providing satellite and internet. And you know, when you're in such an environment like that, doesn't matter how rich you are, you're always going to be envious of the next billionaire who's doing better than you. That's just all in the spirit of competition. You know why you think they're not envious because they're billionaires? Is because you're not a billionaire. It's because for you, money is more important than anything else. But for these people, money means shit. They wipe their ass with money. It doesn't mean as much as actually getting things done. You know, having statues of themselves. Having themselves written in history books. Like that's what for them means more than just money, because money is just paper. At some point you make so much money it becomes useless. And you come into this world without money, you spend your whole life making money, and you're going to leave this world without money. So the most important thing is what you do in the process. So that for them means a lot more than just the money. And if you have that type of mindset, there's no stopping you. The sky is the limit. You don't put barriers on yourself, and you see the potential in the craft that you're putting yourself in. More than just the money. Because, you know, like, when you become a trader, you're thinking more of like, I want to get rich. But you're not thinking in terms of the process, the character development that is making me into this person who's going to get those riches that I want. You know, that means a lot more. Like that discipline you forge along the way, that patience that you forge along the way, that ability to organize yourself and control your emotions, that counts a lot more than just the end goal. And the thing about that, it's like it's a process that you're always getting better at. So every day is like a challenge for yourself. You know, how well did you perform that day? Did you follow your rules? Did you keep your psychology in check? That's what truly counts. Even if you have a losing trade, it doesn't matter if it was a losing trade as long as you followed your rules. As long as you manage your risk. Stay disciplined, stay stoic. Because those skills are going to transfer in other areas in your life. When you're not on the charts, it's going to transfer in another area in your life when you're going to be doing something else. Say we're flirting with 35.50. Candle is considering to break above 35.50. Man, and the truth is, before I found profitability with trading, I thought all this money I was gonna buy so much stuff with it. But once it started coming in, like really coming in, I didn't even think about it anymore. I just think about doing what I do best, you know, and that whatever comes from that, that's just gonna be a byproduct. But when you operate from a point of need, then that's like a low level. That's a low level energy. Is when you're just operating to have these things so you can have this materialistic life. That's a low level energy. And that low level energy wouldn't really get you to those levels that you need to be in. Or the levels that you could be in. Man, I know some traders, man, some traders, I can't even stand some traders. Some traders, all it is for them is just about money. You know, it's like, oh, look at my car, look at this, look at that. Man, in real life, I don't have friends. All right, yeah, we should be good. We should be good. Yeah, what I'm saying is like some people do it for marketing, but in real life, there could be actually really nice people. But if that's just their character 24/7, then trust me, you don't want to be friends with people like that. They will screw you over. Those are the people who are going to stab you in the back the first moment they get. So, you know, I think if you do things with integrity and you move like in that direction, then that's usually the best. Do your friends trade also? No. All right, candlesticks about close here. Got about 3 minutes. Yeah, 27 pip range. Still no direction though in the daily. It's 0.15%. But this would be the area that price is looking to fill. Right over here. Just needs to get above resistance. Start a kickstart this move. And then that's going to be the next range above this area here. That's going to be 35.53. So it's going to be looking to correct these areas. You got one area here and you got another area up over here. Exactly. And whatever you make in this life is left behind for others, back to the government if you have no family. Yeah. Have you taken any prop firm challenge? Yeah, back in 2021, I took FTMO. What do you think about Andrew Tate and the masculinity he projects? I think it's important. There's a few things I agree with him on that case. Like it's quite important for a man to, you know, figure his life first out before getting into committed relationships with women. Because, you know, there's nothing worse than a man who feels emasculated when they're already in a long-term committed relationship with a woman, because that creates a lot of turmoil and there's no, you don't have that harmonious environment that you'd want to have. When a man feels emasculated, especially if they feel like they're not doing enough, they'll be very angry with themselves and they wouldn't be able to provide like a very healthier environment, generally speaking. And I've seen that happen. I've seen some of my friends in situations like that. You know, so I think some of the things that Andrew Tate, he usually talks about mainly just getting your shit in order first. And you know, it's also part of like, if you have heard that saying, before you become a philosopher, become rich. Because it's usually rich people who tell you that money doesn't matter. Correct? But before you become a philosopher, first become rich. Be able to take care of your family and your needs and everything. And then, you know, you can start to spread your gospel. But what Andrew Tate does, man, he motivates people to get healthy, to go to the gym, to make money. I see nothing wrong with that. In terms of his misogynistic comments, maybe, you know, he goes a bit too extreme with that. He goes a bit too extreme. There's a lot of dudes out there who've been screwed over by relationships. So that's also his experience. But it's true. You first must get your shit in order. That's always what I say. That's why divorce rates are above also such a high percent currently, divorce rates. Man, I've had friends pure Christian. The whole family's Christian and you're like strong Christian values. When you get married, you don't remarry. Man, I've had my Christian friends divorce in just like 5 years. You know, it has nothing to do with religion or anything like that. It's just always down to where you currently are mentally at. You know, so you have to be mentally strong before committing like that. And that's what Andrew Tate, for the most part, I think his point is trying to get across. And let's face it, man, if you don't have money and you're not the breadwinner of the family, your woman is not going to listen to you. You know, and what does that, what would that do to you as a man when your woman does not even listen to you because you're underperforming? And it's going to be very clear you're underperforming. Good women are hard to find nowadays. Now he's looking down from 1 minute if it breaks the lows. See, you're rejected. We're still rejecting resistance. He wants us to get supercars. Mr. Tate is a G when he goes extreme. I know he does it. I know he does it because it gets more attention to grow his brand. And he finds it fun to piss people off. Yeah, that's true. That's true. You know what I like about him? He's very well articulated. Like he doesn't say a lot of, he gets his point across very clearly, very articulate. But a lot of the exaggeration is also because it's animation, you know, like on social media, you do have to be animated to some extent. But I'm pretty sure in real world setting, he's not just walking around shouting and yelling at everybody. After 2021, how much you made, like why you stopped taking challenge. It will boost your YouTube channel if you can show how to pass them with your strategy. I'm not a social media guru. If I was a social media guru, yes, I would do that. But at some point you make a lot of, you make enough money to just trade your personal account, and that's more than enough to pay your bills. You know, at the end of the day, if it's paying your bills and you know you're living a comfortable life, like that's for me what matters the most. But maybe when I want to grow this channel, then we're going to start doing that. But for now, I just want the most honest community. And right now, I think what we're building is a very solid and honest community. Because the moment I start showing other shit, then you're never going to know. Like people just come and flake on you as soon as possible. But right now, if you're coming for the value, you're going to stay for the value. And if that other extra stuff comes, you know, that's just going to be an additional bonus. But if you're building your brand off of materialistic things, I always think those communities are never really the greatest to start with. You know, if, for example, let's say if I have 50,000 live streamers watching me right now, but my community is a solid 10,000 people, those 10,000 people are actually the ones who are supporting the channel, not the additional 40K. Correct? Not the additional 40K. It's usually the 10,000 people who support the channel. Those are the people that you want to focus on. And that's what I'm doing. So we don't do it for growth. I've been watching you for 2 years. You know that, right? Yeah, I be 100% know. I know all these profile pictures here. Can you explain what NFP means and how it affects the strength of the dollar? The non-farm payrolls? Just go on Forex Factory. You know, you mustn't ask questions that you can get straight answers to. Go on Forex Factory over here. You know, heck, you could even Google that. You could even ask ChatGPT that right now. But what you want to do is avoid the... you could avoid the red folders. Let's try this. Wait. Hello, could you explain to me what the non-farm payrolls are?
Absolutely. Non-farm payrolls, often abbreviated as NFP, is a key economic indicator in the United States. It represents the total number of paid workers in the US, excluding farm workers, government employees, and a few other categories. It's released monthly by the US Bureau of Labor Statistics and is closely watched because it gives insights into the health of the job market and overall economy.
There you go. Simple. Technology. It's there. Use it. It gets even better and easier every day. Oh, we got a candle. Got a candle here, break above. This thing could even help with your psychology. You know, you're going to ask it questions, psychology questions, and it's going to give you amazing answers. I hope you could hear it because I got the noise suppression on the mic. But I think you could hear it. Could you guys hear that explanation? Leave a 1 in the chat if you could hear it. One. Nice. So you see, like, we'd ideally want to see price moving up here at this point because candlestick closed above resistance, but it's pulling down. It's pulling down, so you just cut it. That's what I'm going to be doing for the breakouts. The moment it pulls down like this, usually that what I've tended to see, those are becoming like really like fake outs, like quick reversals. So you just cut it quickly. We should all go on a tropical trading trip, wake up breakfast, and drink some booze together, trade together, and high leverage. Then hit the beach afterwards. G life. That sounds pretty nice. What's that? Shurdom. Yeah, that sounds pretty good. Shurdom. We're gonna do that in the future. We're gonna have to have like a kind of like a meetup somewhere. And at least pay for the flights or something, or we're just gonna figure it out. Can you do a poll that how many people want to see you pass Prof Firm and acquire $1 million as funding with your strategy? It will reveal the truth. That poll would definitely reveal that truth, because who wouldn't want to see that? That's clickbait. That's like clickbait farming. You know, who wouldn't want to see that? That's the whole idea behind Mr. Beast videos. You open up a video, in 5 seconds you see like a roof falling down on somebody and they have to complete a challenge so the roof doesn't fall down on them. You know, of course you want to see what's going to happen. If I make a video saying how to turn $100 into $10,000 in 24 hours, then it technically should perform well if the content itself is good. But I can only teach you what I'm currently doing right now. So if I'm not doing prop firms right now, I wouldn't want to promote any sort of prop firms or affiliate with any prop firms. I get affiliations every day for prop firms, but I don't accept those affiliations at the moment because that's not what I'm interested in. I'm interested in building a solid foundation for my community first. Because, you know, the problem with a prop firm is if you talk about prop firm challenges and you still don't have the skill, like how are you ever going to pass the challenge? You know, everything shown to you here is what I do on a day-to-day basis, is what I use to pass my challenges. And I'm showing you from a risk management perspective as well how those things can be done. And this weekend, we're going to also do a simulation. This weekend, we're also going to do a simulation. It's interesting that the price is the same level at the same time it was yesterday. Don't mind me, man. You're not organizing nothing like that. While I capped on that. That would be a logistical nightmare. That would be very difficult to do. You're right. It's only possible with maybe a few people. Does your Discord signal work on Signal Copier? Yeah, we use Telegram. We use Telegram for that. See, we got Kevin here from Australia. Welcome, Kevin. Got Mohammed here from Kenya. Welcome, Mohammed. What time and day is the simulation? I think we're gonna do it on Sunday. We're gonna do it on Sunday. I'm gonna schedule it so you can see it on the channel. So make sure you subscribe and turn on your post notifications. I will schedule it on Sunday, or maybe even start scheduling on Saturday. Yeah, the price is very choppy right now, consolidating quite heavy. Those are the only distributions that we saw happen here today. We had one here, and then we had one small one here. And since then, maybe we had some really quick ones happen below here, but mostly just sideways movements. Now, price to create a new resistance. Yeah, you could do your elite members. That would probably be best because then you know them more, as randoms on YouTube could be crazy. Imagine Ricky turns up with his grandma hostage for funding. Oh, we could simulate it. It'd be interesting to do like a IRL type of thing. Don't know how that would be possible, but I don't know if people would watch that. Still nothing on your trading plan? Yeah, nothing, because you know the way I'm watching price right now, I just want to see if it's following rules. You know, so if price, for example, is breaking below resistance over here, and if it rebroke these previous highs to move up, for me that starts to look really nice. It looks like there's no shark in the water. But if we see price, like, you know, the thing is, like, if you see price has already been volatile, you know, we've already been monitoring market since this area over here and this amount of volatility. If you're seeing a lot of volatile market conditions, you just want to be very cautious about the trades that you take. as well. Plus, we're not even trending. We're literally plus 0.09. The daily is a doji. The daily is still a doji. Look at this. It's only moved up here 30 pips on the day. That's equivalent to maybe 1.5 5-minute candles, or maybe even sometimes just 1 5-minute candle. That's how much volume we've gotten throughout this day. So how can you determine the direction of price right now? How? You even have the non-farm payrolls around the corner. It's most likely just buying time, this market, before it has an aggressive move at 8. It's gonna be at 8:30 for the NFP. So they're gonna say no trade zone. I think it moved up a bit here. It's made the range slightly a bit smaller. This is about 21 pips now. There's another small range here that's currently playing out. Saver respects SPA. It's breaking below support. It's a minor support level here to come down. Candlesticks pushing there with no top wick. Here on that sell. Oh, it's like a... It actually looks like also a small little breaky there. Small little breaky on the 1 minute. It's monitoring. You know, like the thing about trading is not always about taking positions. It's also understanding when not to trade. You do not implement trade the range with SR. Not sure what that means, Chris. If you think about from a consolidation reversal perspective, it seems like it's doing that here on the 15-minute. Broke below support, consolidate, and then try and reverse back into this range area. Now, you know, the key thing is we want some direction, you know, we want to see at least some kind of a follow through first. Like if it's gonna fake out, then awesome. Let it fake out. And at least once it starts to move, it breaks out of this area here and then it becomes a little bit more predictable. Right now, you see it's really contemplating what it should do here at this zone. Correct? Like it's right below this level over here. It could respect it, it could come down, or it could just reverse. But I would see this more of like a reversal confirmation. Because people who took sells right here, and then their trade gives them a hard time, and then it breaks some highs, usually they get faked out. Most of my losing trades which have this similar pattern, there's a higher probability it's going to lose when something like that happens. It breaks below, gives like some kind of key entry confirmation, and then consolidates to reverse. Do you trade platforms? No, sir. I mean, do you have a trading plan to trade the support resistance when market is consolidating? Usually that would be... It's possible to do that, but it's nicer if the range is a bit bigger than this. Because this range here is only about like 60 pips. It's nicer when the range is a bit bigger. So let me see if I can find you a quick example. Something like this, pretty big range. Or something like this, a little bit more clear over here. You see this range is about like 133 pips. So 133 pips. See, every time it came up to the top of the range, it would sell off. Top of the range, it would sell off. Then you could look for opportunities like that. But usually trading in a range, you gotta be cautious. You gotta be very cautious. It's much nicer when there's kind of like a cleaner volume in the candlesticks. Because if the London session consolidates, then you know what can you do? What can you do? It does a lot of fake outs. You see, like right here, it breaks below, then it fakes out, comes, breaks below again, then it pulls back up, and then it finally breaks on the third attempt. So it's not an ideal environment. I would be looking more to get the trades out of the range. But that's how you could still trade it. But it's not ideally. Ideally, you'd want to see some sort of continuation. So what I would be looking at is a break of the highs just to get out of this area. As a little accumulation and distribution. Because I'm a very volume-oriented trader. I don't just trade market structure. I also trade... I want to trade distributions. Like outside of levels, not within them. See that what happens when you're trading inside of levels. There's sometimes some bit of uncertainty inside of ranges like this, because you could see the entry setups. But you know, someone asked me the other day that if I'm getting a lot of setups, why don't I take a lot of setups? It's because obviously because of the risk associated with always executing on trades. So you want to make each trade really count. Because it doesn't matter if you get the setup, you know, it doesn't mean you have to take it. The problem with that mentality is maybe some people, it takes them really long to get their setups, correct? So they can't afford to miss those trades. But for us, we can get a setup literally every hourly candlestick. You could be taking a trade, you know, so you have to build your discipline to not feel the need to take every single trade that shows up. This hourly candle does not even have a bottom wick yet. That's interesting. We got 23 minutes for it to close. You're a one-to-one trader. You could look at it like that, yeah. But when we really dive into the details and the way that we can sometimes be managing our risk, it does shape the RR. I mean, it does change it. Because sometimes we can cut risk like 50%. That shapes the RR. Sometimes, you know, we can just cut risk if it just gives us drawdown. Like this now. That shapes the RR. So, you know, the risk is always changing. It can always change. So RR is not just one thing that stays the same. Because every moment in the market is unique. You see, if you took a sell over here, as price was coming down, let's go on the 1 minute. You see, this trade looked really good. Maybe like this. It looked really good. It rejected resistance. You got a fake out. Candlestick came down. Close above, below, support. Next candle broke the highs. It looked good getting into it. But you see, as the trade progresses, the risk also changes. So you're always looking to see how you can lose less. How you can reduce yourself. Because see, now it's forming a potential... It's kind of sketchy over here because it's forming like a potential consolidation breakout from these highs. Here and here. So if it starts breaking above this high, you know, that could be a reason for reducing your stop loss. If you got your stop loss above here, reduce your stop loss here. You close it? Yeah, you see, like, let's see what would have happened for you though. But you see, it's giving you a really hard time now. It's giving you a really hard time. Usually, it's not a good sign. It's better to manage your risk and still have it play out than leave it open if it's giving you too much of a hard time. You cut losses through lower time frame? Yes. Yeah, exactly. Because you know, the 1 minute time frames, they're gonna leave you like certain clues. You see this? It's gonna leave you certain clues. It's getting a hard time for your trade. If you took a sell over here and expecting it to come down, it's gonna leave you certain clues. So sometimes the market gives you luxury of letting you know before screwing you over. You know, and when it gives you the opportunity, I think most of the time you should take it. Because sometimes you can't avoid it with structure if it just comes straight down. You see like how it just came straight down like this? The only way you can avoid that means only if you're looking for clean follow-throughs and you cut it. If it's starting to go into drawdown, you just cut it. Because sometimes it doesn't give you like structure to manage your risk. But then sometimes like this, it gives you that structure, that little warning sign. So instead of risking, let's say in this situation, 30 pips, you can reduce your risk to 15 pips. So instead of having a 0.81 risk reward, let's say for example, that now shifts to about 1 to 1.6. You know, it's all in the risk management. It's all in the risk management. So that's what I mean. Hard trades give you a hard time. Market's giving you a signal. Like it's warning you. At least from the way that I trade. It's interesting that price is at the same level at this time it was yesterday. Yeah, Mamba Fox trades. That's a funny thing you mentioned because yesterday I took a buy. I took a buy on gold where we had our price distribute. Wait, let me try and find it. This is a pre-London time. Go on the 1 hour time frame. I took a buy on gold right over here. And the funny thing was that buy that I took yesterday was literally in the same spot and at the same time that I took this buy. So I was expecting this thing to fly. You know, I was expecting this thing to fly when we took the buy on Wednesday. Expecting the same thing to happen here on Thursday. But I think this setup was not the cleanest setup, to be honest. And we also had ADP. And I think the ADP played a role into the market conditions on this day. Because if you look at the way price was wicking so much, because we had red folder fundamentals during the New York session. Whereas on this day we didn't have any sort of fundamentals. You know, but it was at the same exact place. Same exact place. Would have been really nice to get that Bumbleclot. Well, instead we ended up managing our risk. I got a signal from the market that it wanted to reverse. And I took that chance to manage my risk. So for example, instead of having to stop here, we reduced it to here. And what happened was when the 1 minute broke that low, it just melted. That was an entry confirmation for sells. You know, it broke the highs and then it struggled. This was my buy right over here. And price struggled. You see, every time it struggles, then the market's going to give you a signal sometimes to reduce your risk. So then I took that signal, reduce the risk. And it's the same thing that happening right over here. You take a sell and then the market signals to you that it's gonna give you a hard time because this is like a consolidation breakout right over here. There's a consolidation breakout. You see, that's the distribution currently. If you go on the 15 minute, it looks like it inverted. Oh, let's try 5-minute time frame. Okay, you can't really see it, I suppose, because price is just consolidating here. You know, the problem with like looking for patterns and trend lines in these areas and Fibonacci's is the market plays tricks on you. Like it's just moving sideways, but if you want to see an inverted, maybe sometimes it can show you an inverted. But the reality is it's just moving sideways. So this is kind of like an area that I want to stay clear from until price actually distributes and starts moving. By the way, thanks for answering my question. I'm looking for a streamer has the same vibe as how I trade. This candle, you know what you should do, Chris? Send a chart on Discord, and then I'm gonna look at your chart and we're gonna see. Try send in like a label chart if you can. You see, like on chart rules, you can send in a chart like this. It's very easy for me to see like what type of a trader you are by just the way you've done your analysis on the charts over here. Let's try and give it another break. Let's try and go for another break above here. What time is it? 5:45. We're approaching a time when there should be volume kicking into the market. That's going to be the pre-New York. Do you take trades in the stream? Yes. If I look for a trader with the same vibe as I trade, I'll be a trader who overtrades. And it's a nice diversity here for you because overtrading is not good. I think, you know, what the stream helps people with also is just being patient. You know, some people just watch the stream so they can have a little bit more patience. Just learn the stream words yourself / entry, please. I haven't taken one. Just watching this crazy price action we're getting on Freaky Friday. Something I disagree about your trading plan is moving your SL larger and have negative RR. But you just joined the stream, Chris. You can't know how I trade if you just joined here today. You have no idea. There's so much. There's so much for you to know. What are your favorite trading days? I don't have a favorite trading day. Just as long as markets are moving, I'll even trade a bank holiday. As long as there's volume. My favorite trading day is the day that I'm profitable. That's my favorite trading day. Or the day that I lose less. You know, if I can reduce my risk, also pretty good. My job is just to show up. I show up and take my trades according to my plan. But I know people have favorite trading days. Some people like the middle of the week. I think it's a bit safer because the beginning of the week, markets are setting up, as they say. Friday, you know, Friday is always a sketchy week. A sketchy day, sorry. It's the end of the week. Nobody likes Fridays. But you just explained on your RR earlier. Pardon me if I misunderstood. Yeah, my RR shifts. Like it's sometimes I have 1-to-1 RR. Sometimes it changes. Sometimes it can even be a 1-to-10. If you want, it can even be a 1-to-10. That's what I'm saying. Just focus on the stream. At least tune in for a little bit longer. Because it changes. I'm calling it a day. See you all Monday. All right. See you, Luke. Sometimes it also depends on the setup itself. Because look, if you got a stop loss below here, and the range is only telling you to move from here to here, that's the market showing you that it's gonna have a reaction. You know, it's telling you, the market is showing you that it's moving from here. It can move from here to here, because that's when the next resistance is going to be. So what do you say about this, for example, Chris? Like, you see, if the market is telling you can only move from here to here, are you going to ignore that because of RR? There are also certain things you need to ask yourself. You know, does it make sense? It depends on how you trade. Does it make sense to hold additional drawdown like this and ignore such levels? Because best trades usually will not even do this. They'll just come up. They would come up, retest this zone, and then you can secure maybe like, you know, 80%, and then just let the rest of the position to continue moving bullish to the next zone right over here. So you saw this is like clean traffic. Clean traffic here. We got clean traffic here. Price is accumulating. We're anticipating this to be a distribution. And there's a reason why we typically see these types of reactions from point A to point B. Is because people get in market here and then they're securing positions at these key levels. That's why we always typically see some sort of a reaction as we're heading up towards the next resistance, for example. So there's certain things that you can't ignore. But this has already pushed up here about... Wow, that's only 15.3 pips. Sheesh. There's not a lot of volume here. Because I would typically want to see at least 16 pips. RR doesn't determine profitability. Knowing when to risk manage and protect your capital. Yeah, exactly. Knowing how to lose less is what makes you profitable. Not how to win more. Because you can't control the wins. You can only control the losses. You can only control when you take a trade, when you don't take a trade. But if you, let's say, traded all day with a 1-to-2 RR, then technically speaking, you have to win 50% of the time. Right? But how is your psychology gonna react to maybe even 3 losses? Because you have to be willing to see more losing trades if you want to see your 1-to-2 get hit. And then it also gets complicated with when to put your stop loss to break even, and how many of those trades when you put your stop loss to break even, hit break even and go in your favor. You know, you have to gather all that data. And then it's like depending on the market environment, because you might have backtested a specific month where markets were trending and so you could easily get your 1-to-2 RRs. But what about majority of the time when markets are not trending? How's your strategy going to perform in the trenches? Can you trade the trenches? Can your strategy make you survive in those conditions? You know, because sometimes, man, RR is just not gonna work if the trenches are not providing the RRs. There's a lot to consider, my friend. Like even the higher time frame. If you trade a higher time frame looking for 1-to-2 plus RR, you know, it can get quite difficult. Because like for example on gold, man, like candles already start to move. They already start moving. Even the 15-minute time frames, you already miss majority of the move because of how much volume there is in gold. So as you're waiting for it to close, you're going to miss out. But everybody has a separate challenge depending on how they get into their trades. But you know, that's why we got the Discord here. Send in some charts. We're gonna look at your charts. We're gonna see what you're looking at. This is like see this rusting here? Rusting is taking a sell on Australian dollar, New Zealand dollar. He's selling a supply zone. He's selling a supply zone on the daily. While price is still moving up, he's taking a sell over here. And it looks like based off of a supply zone on the left-hand side. Seems to be the case because prices come up here before and it's rejected the zone, correct? But the only issue with this is on a daily time frame. It might be having some fundamentals that are making price move up like this. Just like gold, gold is moving up because of the potential rate cuts in September. So you take a sell like this, looking at just the technicals, you're forgetting why there was even this bull run in the first place. That could even keep moving price up through that level. Because the condition here, you see, it's a price that's rejected, but it could have been a different time. Maybe there were just no fundamentals to say that Australian dollar could break above these levels. But you gotta see if anything has changed in the economy this time round. And I used to trade like this as well, but the problem with this is if you're getting in with no confirmations, the next candles can still move up and then start to come down. So you'd ideally want to see a little bit more structure instead of just selling highs and buying lows. Like, I like the idea here of how price moved up, created consolidation, and then started to break these lows to confirm the move downwards. And the same way, if price came down towards support over here, how we have resistance and then started to break resistance with clean range on the left-hand side. And you see how if price moved up, look at the way price moves up, hits that resistance, and then has a reaction. Correct? Because these are like breadcrumbs here. Breadcrumbs up towards resistance and then it has a reaction. So that's if you're basing your trade off the daily time frame. That's what you're going to be looking at. Same thing that's happening here. Price moved up, had a small reaction at resistance. And now the next range is going to be above this area. This is going to become like a 33 pip range. Above this zone. 35.53. Got the knife but was afraid to hold it. Ooh. Wait, you already had so much profit though. You took a sell over here and oh, you closed it early. Then it pushed down. Yeah, this is gonna be like a speed bump here for price to break above. This is going to be the next speed bump. And the reality is sometimes it plays out on the first go. And then sometimes, if you're giving your trade a second chance, it can play out on the second chance. Now, I typically don't give my trades a second chance. Like if I was to take a buy here. And I think this break was even such a small break above that accumulation. It's not even 0.5 pips. It literally broke just 0.8 pips. That's not even a significant break to confirm momentum. But let's just say I took a buy here and it was a losing trade. I would just come back the next session. Unless there's volume and momentum. If there's volume and momentum, man, you can give it a second chance. You can give it a second chance. That's if the daily is trending. But right now we're up 0.20% only. I give it a second chance. Trading the daily time frame, imagine 30 candlesticks in a consolidation. Yeah, exactly. You gotta be super patient. 30 daily candles. That's what we're dealing with all the way back here, remember? Imagine the people who were trading the breakout for the daily candle. The daily candle breakout either here, I guess because they already see momentum coming in and the hard power already speak down over here on Friday the 22nd. But let's say you didn't know why price was moving up and you just want to take a break of the wick highs. You'll be waiting ages for this. That's an all-time highs for that breakout. But you see, this just a nice little distribution that it's currently in. The accumulation, break of the highs. So that's why for me, I don't see a difference between trading a higher or a lower time frame, because structure is structure at the end of the day. Identifying that takes experience. Put the 110% learning makes trading easier. You gotta put in those 10,000 hours. Imagine 10,000 hours of doing the same thing over and over again. How good you can become at doing that craft. 10,000 hours. That's what they say. You need to become an expert at anything. Let's see. So if you do, let's say you do 5 hours a day. In a week, that's 35 hours. In a month, that's 140. And in a year, that's 1,680. And in, let's say, 9 years. Oh, wait. Then 640. Let's say 7 years. Okay. Then 640. Let's say 6 years. Yeah, just about 6 years. Takes you 6 years to do 10,000 hours. I'm definitely at 10,000 hours. That's if you're putting in like 5 hour days, 7 days a week. Nasty 1 hour candle, no bottom wick is pure insanity. Yeah, there's still no bottom wick, but we got a new candle though. New candlestick is just opened. This is that pre-New York candle. See how volume is already starting to come in here? But yeah, previous hourly candle, no bottom wick. Doesn't look good. Still far away from that. It's 1,250 trading days. $1,250 trading days at 8 hours. Oh, damn, I closed something. I think for me, it's about 4 years to get there. That's nice. You mustn't lose the confidence of execution. The one thing I like about you is that you execute. You don't hesitate, you know, because it's good. It's also good if you can execute without hesitation, because you can definitely learn something from it. But when you hesitate, you learn less, because here's the thing. If you're hesitating a lot and you're missing a lot of trades, you don't learn from those experiences. You only look back at it from a perspective of FOMO. But if you actually took the trade, you're going to learn like maybe a bit of confidence in that execution. You're going to learn more about the psychology of the trade, why you executed it, and all those things. But if you're just standing on the sidelines all the time, you're going to miss a lot of opportunities where you could actually learn from. Because remember, there's no losing in trading. There's only learning. So if you take a loss and you're still learning to trade, at least you execute it and you can learn something from that trade. Whether it is that you didn't wait for the candle to close, maybe you rushed it, maybe you could have done something a bit differently. But it's going to force you to learn, because you've lost real money. And if you lose real money, you want to at least get some kind of a lesson for it. Last week was fire, but lost money every day this week. Yeah, so far September has been insane. It's been a difficult month. It's been a difficult month. Like, I'm not getting the easy trades. Like, I actually have to work for these trades that I'm getting these W's on. Whereas, like, you know, the other previous months were really good. Like, they were a lot easier. Psychology as well. Could you imagine, like, your psychology when price action looks like this? Imagine how your psychology must feel when price looks like this. You're getting W's, maybe a couple losses, and W loss, and then you got a nice streak of wins, compared to how your psychology shifts when things start to look like this. You know, it's a huge difference. It's a huge difference. I lost my account this week. This is an opportunity for you to get back on the horse. Just don't risk too much, you know, just keep your risk in check. Keep your, man, at some point I was losing so much, I couldn't go above 0.5%. Otherwise, I was going to quickly blow my account. Because I was taking a lot of trades. Because my whole mindset was failure. I need to bang out this failure back to back to back to back. Because the more I'm banging out the failure, you're getting rid of those bad habits. Like you're understanding, or let me not say you're getting rid of bad habits, but you're understanding how candlesticks print a little bit better. So as you're putting in that work, you know, don't be afraid to fail. Fail. But make sure your account is not blowing. That's the important thing. Even if it means reducing your risk to 0.5% per trade. It's my first time here. Do you give signals or do you teach how does it work here? Yeah, both. Because you can't also give trades without you can't just give signals. I just want to explain to you first of all how we look at markets. You know, and then when you do take the trade, it should make sense to you. You never take a trade when you also don't understand the concepts. Then that becomes like gambling, you know? But oh, I forgot to put my banner here. It's already end of the stream, but we forgot to put up the banner. You know, relax. Don't overtrade. It's a Friday. Forgot to put up the banner. I got you, Kraken. Let's see if that loads through. Come on, where's Nightbot? Oh, there we go. Market's kind of slow. 0.16. It's gonna be the next area for buys. If you're gonna be looking for buys above, it'll have to be above resistance here. What am I waiting for? Waiting for price to break above resistance. It needs to get out of this whole zone because there's a lot of like uncertainty within this general region. Sure, there was some opportunity over here, but there's still no direction whatsoever. But it's got a lot of leg room, you know, because we have the hourly candle which just opened up. It's creating like hourly lows. So if this hourly flips, you know, what's the probability that this hourly candlestick can make its way up over here? If you even measure out the previous hourly candle from the lows, this could easily be done on this hourly. This is a pre-New York. So with pre-NY, volume should already start kicking in. So I believe if like hourly starts to break above like 35.53, could get the rest of this range here being filled up. But you know, at the same time, it's like a Friday and right now it's like you gotta force the market to give you something and it's kind of boring. So I think I'm gonna call it a day here, guys. And I will see you all next week. No, I will see you this weekend on Sunday for simulation session. I'll schedule that on the channel. So make sure you subscribe, turn your post notifications, gang. And I'll see you guys in the next one. Adios.